The broadcast is now starting. All attendees are in listen-only mode.
Welcome, and thank you for joining us for today's webinar entitled 2017 Top 10 China Financial Industry Trends, brought to you by Capron Asia. My name is Paul Robinson, and I'll be acting as the webinar moderator. What lies ahead for China's financial industry in 2017? With economic growth slowing and money outflows testing the resolve of regulators, reforms remain a challenge. And despite this, China remains at the center of fintech universe, with tech giants such as Lufax, PingAn, and Ant Financial redefining banking in the country. 2016 saw growth in private banking, yet there's been no significant success to talk about. Will this continue in 2017, especially with more licenses being issued and more firms applying? In this informative 45-minute webinar, we'll look at the answer to these questions and discuss the critical trends and provide insight into what is happening in China's financial industry. Now, before we start, I do need to inform you that today's session is being recorded and is run in listen-only mode. However, we really want to encourage feedback and questions from you throughout the webinar. And since we always get lots of questions, we're going to get through the presentation in approximately 30 minutes, and then we'll spend about 10 to 15 minutes in our Q&A session as well. Now, to facilitate this discussion, we're going to use two features of the webinar software. The first is the viewer window, which you'll see the presentation in, and which I recommend maximizing that now so you can see it in full screen. The second is the control panel, and this is the way you'll interact with us as well. So this control panel can be opened and closed by clicking on the arrow button on the Grab tab, and in that control panel you're welcome to submit questions and comments to our presenter. And as I mentioned, we'll be answering as many of these as possible after the presentation, but I'll also be answering them as we go along too. Now, our presenter today is Zenon Capron, Managing Director of Capron Asia. Zenon is joining us from Capron Asia's head office in Shanghai. As one of Asia's leading providers of independent research, custom consulting, and advisory services focusing on the financial industry and financial technology, Capron Asia helps clients understand and navigate a challenging region with rapidly changing business, operational, and technological environments. Now, with all of our housekeeping out of the way, let's get started. Go ahead, please, Zenon.
Great. Thank you, Paul, and thank you everyone for joining us today. This is the second of our two webinars on trends for 2017. Yesterday we had the India Trends webinar where Anshuman Jaswal, our head of India, Director of India, was doing the presenting, and today we have China. If you missed the India webinar yesterday, please do look at our website. We have the recording that will be put up in the next day. So here I am in China looking out the window to an overcast sky in Shanghai, and although nothing has changed, everything has changed. 1 year in the financial industry here in China is probably several years in many other markets, and I think 2016 was no different. Really, when we look forward to 2017, there are a couple things that we want to point at and look at that we see as being some of the key trends for the year ahead. One of the things that we've done for the webinar this year is we're not tracking the reports exactly. So basically what I'm going to give you today over the next 30 minutes or so is some high-level overview points that we see as being critical for 2017. So not exactly what you'll find in the 2017 Top 10 Trends report, but just some high-level things to keep in mind as we go forward. So for us, for 2017, we see two main trends for China's financial industry: how to manage innovation and change in a declining economic and financial industry situation, and digital. And we'll get into both of these throughout the webinar, but basically what we're saying here is, look, there's a lot of change that's happening in China. Digital is really the trend here. If you've been following anything that's been happening with Ant Finance or Lufax or any of the other digital players here, digital payments and digital finance are really a reality. And that's having some strong impact and engagement in various different areas of the industry, in particular around financial inclusion and economic empowerment. What we're seeing some of these platforms do in the second and third tier cities in China is truly amazing and changing. But with all of that innovation and change comes a lot of challenges for the regulators and challenges for the industry as a whole. To a large extent, many of the financial institutions have been left behind in areas like payments, and increasingly lending as well now with the peer-to-peer lending platforms that are in place, and then companies like Lufax doing an incredible amount of consumer lending in China. So really these two trends are something that was definitely part of the equation in 2016, but will remain to be a strong part of what we expect in 2017. Now, we do these top 10 trend reports every year, and in some ways, where we are in January 2017 is very similar to where we were in January 2016. December 2016, in Beijing, this is a screenshot on the left, or a picture on the left of the pollution in Beijing last year in December. On the right, some of the things that we saw in 2016, we saw the elevated bus that ended up being essentially a P2P lending scam, funded by a P2P lending scam. We saw Uber shutter its doors and be brought into the fold with Didi Kuaidi, one of the local providers of similar taxi services. And we saw controversy around WeChat and what was censored on WeChat. So really, where we are right now in January 2017 is not entirely different than where we were a year ago in January 2016 in terms of some of the economic and environmental challenges that we're facing within China and within the country. That being said, systemic issues still exist. So China's foreign reserves, as you've probably been seeing over the past year, have been dropping dramatically. And so that's put the Chinese government, in a very tight situation, basically trying to prop up the Chinese renminbi while there are significant outflows that are pushing the renminbi down. So this will be a challenge as we go forward in 2017, how the government is able to handle these net inflows and outflows from China, because that is really challenging, especially when we consider that the economy is slowing. So if you look at the graph on the right, you can see the growth in GDP in China over the last 12 quarters, and that's been gradually declining. We're past that important kind of 7% mark and dipping down into 6% territory. So as the government looks forward to a leadership change later in this year, where some of the key posts in the Chinese government are being redecided in the national code elections, this will be one of the things that's on the forefront. Is as China continues to slow down and kind of the soft landing that we're seeing within the economy, how do they meet that challenge? How do they continue to grow, being such a large economy? And this was something that Anshuman talked about yesterday as well. But of course, Trump. I forbid myself from including anything about Trump in the presentation itself. But it goes without saying that it needs to be mentioned that Trump and China will be a big topic over the next year. I mean, some of the rhetoric that we're hearing coming out of the U.S. right now is not indicating that it's going to be a very pleasant relationship for the two countries going forward. But at the same time, they are such important trading partners. So how that plays out in geopolitical issues like the South China Sea, and more importantly for our talking today, trade. How Trump approaches trade with China will be critical as we go into 2017. Banks are still struggling as well. This chart is quite an interesting chart. So if you had followed China for many years, you would have known that the interest rates are fixed, or were fixed in China. So basically the government gave a band within which banks could lend money and pay depositors. So if you look at this chart, the top line that you see there is the original lending limit. So this was basically the percentage points that a bank could lend at. And that, up until 2013, was set by the government. So in other words, there was a top-end limit on what money could be lent out to small, medium enterprises, SOEs, or even individuals. On the bottom end of this chart, you see the lower deposit limit. And so this was basically the lowest that a bank could pay depositors to deposit their money into the account. So those were set by the government. In 2013, they dropped the limit on lending, on the upper lending limit, and they also in 2015 dropped the deposit limit. So essentially interest rates are now free floating in terms of lending and deposits in China. Now this bar down the middle, this kind of bluish bar down the middle, is where we actually are So if we look at all of the lending and what's happening in China right now, this is the margin that banks are facing. So if you look back in 2004, banks were lending out typically at about 5.5%, and they were paying deposits at just under 2.5%. So that gave them quite a thick margin back in those days. Almost 2.5%, 3%. If we fast forward to today, if you look at October 2016, the latest data that we have on this chart, the percentage is down around 1%. So the margins that banks are able to get off their traditional business are shrinking, which is causing challenges for some of these organizations, because they were, many of these banks were used to much higher profit margins, obviously, that they were getting in 2004, which made them some of the most profitable in the world. But this crunch over the past couple of years and the increased competition from the market has really decreased this margin that banks can take out. Bad debt as well. NPLs, non-performing loans, have always been a challenge for China. So if we look back to 2004, the NPL rate was way over 10%, and the amount of loans that were going bad around that time were quite high. Now we can fast forward to 2016, and you can see that the NPL rate, at least the official reported NPL rate, is just under 2%. So basically what this means, the combination of these two statistics, are that the NPL rate, so in other words, the percentage of loans that are going bad, has decreased dramatically over the past 10 or 12 years. So we've gone from a high above 10% down to 2%. But the amount of bad debt has increased dramatically. So in 2016, you can see the NPL amount, which is in billions of renminbi, has increased dramatically over the past couple of years. So although, overall, the banks are getting better in terms of lending out the money, they're lending out a tremendous amount of money. So although the percentage remains low, the amount in absolute terms of that bad debt is much higher. And so that's another challenge that we'll see in 2017. That being said, the government is opening up the market. So if you look at over the past couple of years, this was a slide that we showed in our webinar, in our 2016 Top 10 Trends webinar for China. We've seen in 2016, we saw the Shenzhen Hong Kong Stock Connect open up. We saw the interbank market, bond market, open up more to foreign investors in China. And so we'll see in 2017 where that goes. There's been some talk about connections and a link between one of the Chinese markets and Europe, potentially London, or other geographical reach of the market, as well as opening up the products. So if we look at the products and the capital market side, I mean, we've seen an increasing number of openness to cross-border investment over the past, more specifically since 2015, things have really started to increase again in terms of the speed of opening up. But we should see that continue in 2017. So although when we look back a year ago and we compare the 2016 Top 10 Trends to 2017, in many ways it was the same, in other ways it wasn't. One of the big stories of 2016 was Ant Financial, and that will really continue to be the story going into 2017. And I would assume most people on this webinar are familiar with Ant Financial, but just very briefly, Ant Financial is essentially the finance-focused affiliate of Alibaba. So originally started as Alipay, the unit was spun out into Ant Financial and now has a variety of different products and services, from lending to credit scoring to traditional payments that they used with Alipay. Ant Financial is one of China's unicorns. Right now it's got a $60 billion valuation. It has 450 million Alipay users, 150 million of which are rural users. There's over 200 million transactions per day, so in other words, payments per day. And since it started lending in about 2010, it's lent out 750 billion renminbi, which is a massive number. So it's about, I mean, if you consider that's about 1.4, 1.5 billion, 150 billion US dollars. Now, compare that to Grameen, which is probably one of the more well-known examples of lending globally. Grameen, since its founding about 25 years ago, has lent out about $17 billion. So in a quarter of the time, Ant Financial has used its digital platform to lend out nearly 10 times the amount of money that Grameen has done in 4 times the amount of time. So really the impact of this company is massive. And if we look on the right are just some of the other companies that Ant Financial is invested in. The first one is Zhong'an Insurance. Second one is Yuebao, which is one of the financial products, and the third one is Koubei. Zhong'an is China's first digital-only or digital-first insurance company. They offer insurance for everything from flight delays to traditional auto insurance, life insurance, everything you expect from any other insurance company, but they do it pretty much fully online. Yuebao we've talked about a lot. Yuebao has expanded. It's essentially an asset management product that's within Ant Financial that allows them to do other products and services outside of just simple money market funds. So using that platform, you're able to invest in much more complex wealth management products. And Koubei is one of their kind of online to offline products, similar to Dwarfing, which is a directory of food, restaurants, products and services where you can essentially order things offline or make reservations offline online, and then go to the restaurant offline and eat at the restaurant or buy movie tickets or whatever you want to do. And so increasingly this Ant Financial is really creating this platform that involves not just payments but moved way beyond that. Lufax is another example. Lufax, as Paul alluded to at the intro, is one of the other unicorns here in China. Right now they have about an 18.5 billion valuation, and they're looking to do a second half 2017, likely second half 2017 IPO with a target of $50 billion. This Lufax is a largely online wealth management, insurance, financial product distribution platform. So within the Lufax platform, you can invest in peer-to-peer loans, you can buy fixed income products, you can invest in funds, you can buy insurance, money market funds, and even structured notes. And this platform has really grown over the past couple of years and now has 300 billion renminbi assets under management, 6 million active investors, and 2 million borrowers. So this will be one of the other kind of fintech unicorn stories in 2017. What this means is that increasingly things are moving digital, and if you've seen our presentations before, you've probably seen this data. In 2010, about 60% of all retail consumption was cash, and which is unsurprising for China when you consider what a cash-based society it is. This is changing dramatically. Right now, in 2016, we're at about maybe 30% cash, and that's projected to dip to about 20% cash in 2020. And so that's a dramatic change, and that's all been driven by these digital payment platforms. And so increasingly, as these digital payment platforms become more popular, then they're pushing into these other digital products and financial services, which is a big part of kind of the fintech story here in China. And mobile payments are pretty much unstoppable. I mean, if you look at mobile payments over the past 4 years, this chart just kind of shows, this is Alipay, WeChat, and other, the amount of money that's flowing across these mobile payment platforms is really incredible. And just using my own self as an anecdotal example, most days I go without using physical cash. I will either order online and complete the transaction using Alipay or WeChat Pay, or if I'm going to one of the convenience marts or to a restaurant, I'll use Alipay and WeChat Pay to pay. And there's not particularly any reason that I do that. There are loyalty programs on both of those, but it's just the convenience. My phone opens up with a thumbprint. I can open up the phone, I click on an icon which shows a QR code that the retail outlet can scan, and it pays immediately. So we've finally gotten to the point with mobile payments in China where it actually is easier than a credit card or cash. And that's changing not only my habits, but the other 1.4 billion people in China that are increasingly using these digital payment platforms to pay at the retail outlets, to pay their bills, and to move into digital finance in general. Having chat helps. So one of the papers that we're working on right now is with the UN, and we're looking at how digital payments have transformed the economy here in China. And a large part of that story is social as well. So if you think back, WeChat in 2012 was essentially Tenpay at that point. So if we look back at 2012, Alipay owned about 60% of the market and peaked at about 80% of the mobile payments market in 2014. 2014 was when when Tencent basically incorporated payments into WeChat. And so through using a red envelope campaign, they were able to go from about 10% of the market to about 30% of the market, the mobile payments market, where they are today. So as much as certain things in China are set, nothing stays the same. If you had asked us in 2014, would Alipay continue to strongly dominate the digital payments market, we would have said yes, certainly they would. But then Tencent came along, and now we've seen them with about 20 or 30% of the market. So things are changing in that. Will social be the driver of payments in 2017? If we look at this, we compare the annual payments per user versus the average active monthly users for WeChat, and it's actually that the payments are growing faster than the usage of the platform itself. So basically the people that are using WeChat for payments is increasing faster than the people that are getting onto WeChat in the first place, which is an interesting shift in the growth of these platforms. And these are increasingly large revenue drivers for these companies. They don't really split out, in many cases, the revenue that's coming from these platforms. But if you look at the amount of money, if you do some calculations on the back end, which we do in the 2010, in the report, the 2010 Trends report, the amount of money that these companies are making off of payments at digital finance runs into the billions of RMB. So it is increasingly a larger part of their product portfolio and indeed their revenue streams. What this is meaning is that this is having a big hit on fees. So we did a study late last year looking at what the impact of some of these digital platforms were on the banks, and basically calculated that in 2015, China's banks lost about $20 billion in fees to the digital payment platforms. So we basically calculated the amount of revenue that would have come from card swipes and typical payments, and then looked at how much of that went across digital, and a full 20 billion US was essentially lost to these digital payment platforms. So that's a dramatic shift. These platforms really dwarf what's happening in the West as well. I mean, we did a comparison here. We just have WeChat, PayPal, Alipay, WhatsApp, and Facebook Messenger on here, and you can see the date of their launch when they incorporated various functionalities, and then the number of users that are on these platforms. One thing to keep in mind is that on Alipay and WeChat, although WeChat is expanding globally, and as is Alipay to a certain extent, these are mainly Chinese users that are on this. So there's still a tremendous opportunity for them to expand internationally, and I think we'll see that. Compare this with WhatsApp and Facebook Messenger. I mean, these Western firms have struggled to really bridge into digital payments. WeChat has gone from being a social platform to a social commerce platform where you can do anything from book movie tickets to chat with your friends to split the bill to find the restaurant that you want to have dinner at. So these Chinese apps have become platforms and destinations in their own right. But in the West, we're starting to see Facebook get a little bit more involved into these financial platforms, but it's still really early days. So how they develop going forward will be quite interesting to see. Finance is going digital. If we look at the wealth management market share this year, in 2015, when we look back, the BAT, so Baidu, Alibaba, and Tencent combined for about 5% of the 17.5 trillion renminbi wealth management product market. So that's basically referring to any of the wealth management products, which includes what would typically be money market funds for other markets. These wealth management distribution of the 17 trillion renminbi, 5% of that was controlled by the BAT. So they were basically distributing that amount. We'll see that increase dramatically in 2020. I mean, if we look at the offline traditional financial institutions, their share of the market, while overall the pie is getting bigger for everybody, their share of the pie is decreasing dramatically by about 20%. And so a lot of that is being taken up by Baidu, Alibaba, Tencent, as well as companies like Lufax and Credit-Ease, which are increasingly capturing more of the market share around these wealth management products. Robo-advisors are also a big trend here in China. So these are just a couple of the robo-advisors that we're seeing launch in China and some of the investments that we're seeing go into these. This is excluding the bigger products like from CreditEase and from Lufax, but certainly robo-advisors are growing in popularity here in China. And it's especially important here in China because the ETF market here in China doesn't really exist. There's not a very sophisticated ETF market. So there's not a lot of choice for people to essentially distribute their funds and spread their risk out, kind of the concept of portfolio management and spreading out their risk. So these robo-advisors increasingly in 2017 will play an important role for investors that are looking to diversify out of the more traditional financial products here in China. And when you look at the performance of the stock market over the past couple of years, you can see why some of these players are looking to get out and to move into alternative assets and alternative investments. So robo-advisors will continue to grow. Private banks as well. So in 2014, 2015, the government started putting in place the structure around private banks. So if you think about all of the other banks that were set up in China, most of those were state-owned, even though many of them were listed in Hong Kong or in Shanghai. So now we have these private banks that are completely private and largely run online. So WeBank, MyBank, Wenzhou Minchang Bank, KCB are just a couple of the ones that are there. As well as many that are waiting to open. So there's a number more that have been approved that are still waiting to open. So this market will increase as we go forward into 2017, as well as some of these other banks that have been approved by the CBRC, it should be, come into operation. The interesting part about some of the investors in some of these products, WeBank obviously has Tencent as an investor, and MyBank has Ant Financial as an investor, but some of these other banks that have been approved have really interesting investors. Just looking at some of the investors, fisheries, property management companies, medical equipment companies, door window makers. So behind Anhui Xi'an Bank, Fujian Huatong Bank, Wuhan Chongbang Bank, all of the banks that you see listed there, there are 1 to 2 investors behind each one of those, and some of their backgrounds is quite interesting. So you have fisheries that are now getting into banking, and I guess the opportunity that they see is some of the success that they've seen from some of these other players. If we think back a couple of years, one of the peer-to-peer lenders in China was actually a fireworks maker, so a company that made fireworks and decided to get into peer-to-peer lending. So it seems to be open for anybody. But the impact of some of these organizations still seems to be limited. As of about October of last year, the approved and operating private banks in China accounted for about 132 billion in assets. Whereas if we compare that to ICBC has 22 trillion in assets. So the uptake of some of these private banks still remains to be seen, and so that will be one of the challenges going forward, especially with all of these other banks that are opening up, essentially all of these other challenger banks that are coming to market. Things are moving beyond finance as well. This is an example and something we learned about when we went down to meet with Ant Financial earlier this year, is a product that they call Ant Forest. And basically, you can claim credits. It's on your own honesty. But if you pay for something online, or if you take public transportation, there will be little bubbles that appear that you can click on, and you can essentially claim your carbon credit. So if you pay online, you save 2 grams of carbon. If you ride the bus, you save 5. And so basically, Ant Financial has created this product to increasingly make people aware of their carbon footprint. As I showed from the previous slide there in Beijing, pollution is a big problem, and a lot of that is down to car ownership in China, use of energy here in China that just hasn't necessarily reached the understanding and sophistication of Western markets in terms of conserving energy and using public transportation, etc. Here it's very much it's keeping up with the Joneses. So having the car and being able to have that flexibility is very important, especially in the big cities where that's important. So Ant Finance is basically trying to create this awareness around the carbon footprint and really move beyond just the traditional finance space. And so when you look at what some of these companies are doing, as I mentioned before, of the 450 million people that are using the Alipay platform, 150 million of those people are rural users, so people that are in the second and third tier cities. And that's huge because especially in those places where it might be more difficult to get a point of sale terminal from China UnionPay, it might be more difficult to get to your bank, these platforms offer an alternative and a way for people to find financial services when they might need it. And increasingly that's being incorporated into lending as well. So these small, medium enterprises that have been starved of capital in the past are able to have access to the capital that they need to survive and grow. So that's why we're seeing the government be very supportive of a lot of these platforms. So that was a quick look at some of the trends that we're seeing. Just in conclusion, you know, we're going into a tough economic environment in 2017. I think for the things that I mentioned, the slowing economy, the questions about the Trump administration's attitude towards China, the structural issues that China as a whole just needs to get through are still going to be there in 2017, which will make things difficult. But this digitization and fintech, or now people are calling it tech fin, will continue. So we're moving beyond digital payments to essentially digital everything. You know, if I look at my own lifestyle, again, as I mentioned before, most of it is done on my mobile phone, from ordering food to paying bills to recharging my mobile phone. And I'm just a small representation of what's happening in general here. Increasingly, 1.4 billion people are conducting all of their finances on the mobile phone. The regulatory environment around this is still unclear, though. We've seen in 2016 there was a little bit of pushback on mobile payments. The government put some restrictions in place in terms of how much could move across these platforms in any period of time, and around peer-to-peer lending as well. So the jury is still out on what regulators will do in 2017, but in all likelihood we'll see some additional regulation, probably first around Bitcoin. That's been a focus of the regulators over the past month and a half, and we'll likely see some more firm regulation around that as the government seeks to combat offshore outflows of renminbi out of China, or currency out of China in general. But we will probably see more regulation in the fintech space as the government comes to grips with what's there. Blockchain, artificial intelligence, cloud, IoT. IoT is a bit of a question mark, but certainly blockchain, AI, and cloud in banking are critical trends within the technology space. The government has put a lot of focus on blockchain going into 2017. Private companies like Wenxiang have invested heavily into developing kind of centers. There's a city outside of Hangzhou that's being focused on blockchain. So there's a lot of interest in blockchain in China and everything that's going to happen around that. A couple of articles earlier this week around Ant Finance and Eric Jing making some comments in Davos about how blockchain is part of their strategy going forward. So really the purpose of this webinar was just to give you a flavor of some of the things that we're covering in both of the top 10 reports. These reports are now available to subscribers of our research service or as individual reports. So if you're interested in this, please do reach out to us through research@capronasia.com, and we'd be more than happy to give you a little bit more insight into the reports themselves and help you get those. In both of those reports, this is about the 8th year that we've been doing these reports, and we're happy to have the India report starting for the first time this year. And really, we hope that gives you some insight into kind of what's happening in that market as we continue to expand our presence in India, and then, of course, continue to bring you what we consider to be the most insightful findings and insight on what's happening here in China as well. And so with that, thank you for attending the webinar. Let me pass it back to Paul, because I believe we've been getting some questions in the background, and maybe we can go through a couple of those before we finish.
Okay, we certainly have been getting those questions in, and so let's get to those as well. Although I'm going to tell you, I was smiling when you were giving the presentation there about the impact of WeChat. Every time I visit China, I'm amazed at how my work colleagues rely on WeChat to make payments for everything. It's like I never see them pull out their wallet and get their credit card out. I'm like, oh, this is very, very strange to me, but a fascinating way of payment. So. All right, so Q&A. Let's see. First question, this one comes from Kat, and it says, do you see the margin squeeze on China banks changing anytime soon? And do you see competition increasing?
Yeah, that's a really interesting point. I mean, I think that chart that we showed a little bit earlier on is really illustrative of the challenge for the traditional finance industry here in China. I think a lot of these organizations relied heavily on the state-owned enterprises for a lot of the lending. So they would, they would obviously, as these large banks had a large portion of the deposits of most of the depositors and consumers in China, they were able to take that money and lend it out at relatively competitive rates to the state-owned enterprises. Now, there are a number of things that are happening around that, a number of confluences that are happening that are squeezing that margin, and none of those are going to change anytime soon. I mean, the banks are facing increasing competition from these smaller players, so the we banks and the my banks that are bringing lending to the digital platform. At the same time, the payment revenue is going away. We talked to a bank a couple months ago, and they said, "Forget about payments. Don't tell us any more about payments. We want to know how to save the rest of our business." And so that margin squeeze is going to be really challenging going forward. It's increasingly challenging for these banks as well because we don't really see the response that we're seeing in other markets to fintech. So if you look at things that like banks like DBS in Singapore are doing, I mean, DBS has a massive innovation center and has really invested heavily in innovation for within the bank. But here in China, outside of a couple of banks, we're not really seeing that from the large traditional players. So that margin squeeze really isn't going to disappear anytime soon and become even more challenging going forward in the future.
Okay, thank you very much. All right, this one follows on from the message you had in, I think it was your last slide there. This one comes from John. It says, does blockchain really have a role in the future of China? It seems like the opportunity is very limited.
Yeah, it's an interesting question. We go both ways on this. I think blockchain in our minds is a very elegant technology, and Bitcoin was an elegant solution to a problem that didn't really exist. The need to move money around or for merchants to take a virtual currency here in China just didn't really seem to be a problem, especially when you have these digital payment platforms that are very convenient. So there wasn't much of a play for Bitcoin. Now, blockchain technology, obviously underlying Bitcoin and the technology behind that, it will be interesting to see how this goes. Obviously, companies like Ant Finance are big into blockchain. PingAn is another one that we know is investing heavily into that. So I think there will be some use cases here, but I think we have to contain our excitement and not get overly excited about the potential future of blockchain in China in general. I think there are particular use cases, but it may not be as large as some people think going forward.
Okay, thank you for that one. All right, next question. What about the risks in the market? Where can we expect to see those in 2017?
I'm sorry, you crackled out there for a second, Paul. Could you repeat the question?
It's okay. Question was, what about the risks in the market? Where can we expect to see those in 2017?
Sure. So I think we alluded to some of the risks, and we talk about it in a little bit more detail in the reports themselves, but the risk is really coming down to the corporate lending. The loans that we're seeing going out to some of the large state-owned enterprises have reached record levels here in China, and it's unclear with the slowing economy whether these companies are going to be able to service that debt. And so that's increasingly a challenge going forward. I think that's probably the biggest challenge for the market going forward. There are a lot of smaller risks and smaller challenges out there as well. I mean, peer-to-peer lending, although peer-to-peer lending has been regulated and the number of platforms has decreased, there's still quite a bit of risk involved in that space. But I think in general, the risk is really going to be more around the traditional players. How do the traditional players respond and continue to compete in this increasingly competitive market? And then how do they deal with these potential loans that could go bad? And we're starting to see some of the edges of that in 2016. And so in 2017, that will certainly be a risk going forward.
Okay, thanks very much for that answer. So, Zana, we still have a few more coming in, and folks, I know we said we'd finish up around quarter to the hour here, so we'll just go with one more question. I know there's some questions from Y, Jack, and Christine that we need to get to as well, so we'll get to you. I'll explain to how we're going to get those, but we'll just go with this last question as well. China seems to be leading in fintech. can that last in the future?
Yeah, that's another good question. I think certainly we believe that fintech in China is the largest in the world. I mean, when you look at the valuations of the companies like Lufax and Ant Financial, they're really larger than any other fintech unicorn globally, and the potential of impacting this society and this country for something like fintech is huge. I mean, when you look at the scale involved in Alipay, 450 million people is 1.5 times the population of the U.S., which is a massive number of people. I think what will become a little bit more apparent in 2017 around fintech in China is a little bit more rationality around what the future of the market is going to be. I mean, I think we've seen certainly companies like Lufax and Ant Financial put their foot and their stake in the ground in terms of their market share, and these companies won't disappear that quickly. But there's a large swath of kind of second and third tier players that are in the market, and there's potentially thousands of companies out there. I mean, certainly thousands of peer-to-peer lenders, but even for a country as big as China with 1.4 billion people, there's no reason that we need 2,000 peer-to-peer lenders. Similarly, there's no reason that we need 1,000 companies that are managing credit checks. So I think there's a little bit more rationality and rationalization that's going to need to come to the market in 2017. And so I think we'll see some more consolidation around that. That being said, though, I think still going forward, this really truly will be the market where we can see the most impact from fintech, whether that be measured by the valuations, the number of transactions that are going across some of these platforms, or the amount of money that's invested in wealth management funds. It's truly leading the globe in terms of the impact that fintech is having on the market.
Okay, thank you very much for all that, Zenon. Right, as I mentioned earlier, we haven't been able to get to all the questions being submitted today in our webinar, but we have been busy answering those in the background, and we'll be responding to you individually if we didn't get to your question here today as well. Now, as Zenon mentioned during the session, today's discussion was based on Capron Asia's upcoming 2017 Top 10 Trends in China's Financial Industry Report, which is available as part of Capron Asia's subscription service or an individual report. If you haven't already registered for this valuable service, we'll also be providing a link to do so in the email that you'll shortly receive, thanking you for your attendance here today. In that email, it will also contain a link to the recording we've been making of the presentation, so that way if you feel you've missed some information or you want to listen again at your own pace, you'll be able to do that as well. Once again, Capron Asia appreciates your time today and hopes you found the information informative and helpful. This concludes our webinar today. Thank you for joining us, and of course, have a Happy New Year.